we've been waiting for one of these, kind of transformative acquisitions for some time now.
The responses were still sort of shock and, ranging from holy crap to, WTF.
Welcome to SlatorPod, the language industry podcast where we talk about everything related to translation, localization, globalization, and all related industries, deals, and whatever else is happening in this space. Hello from Zurich.
Hi from London.
All right. Well, London, that's where it's happening right now, isn't it?
Always. Yeah, always.
Yeah, but now in particular, in this industry.
Oh, now in particular. Yes.
Biggest deal ever.
Ever. Yeah, you reckon? Ever? Well, yeah, obviously. Okay.
Yeah. I mean, there's, I guess, there were others that were maybe bigger. One other that was bigger in terms of the valuation, but I mean, this is transformative, and we're going to tell you soon what we're talking about. Of course, we're talking about the RWS SDL deal, which we're definitely going to dive in. So we're recording this. Actually, we had to record this on a Thursday, and we're publishing it on a Friday. So this is pretty much breaking news at the time we're discussing it. But London.
Less so on the Friday, I suppose.
London or surroundings. I actually don't know where is. What's the headquarters?
Chalfont St. Peter.
I can't pronounce
Chalfont St. Peter. Well, that's the headquarters of RWS, and then SDL is headquartered in Maidenhead. So neither of the two technically are headquartered in London.
Are they within the what's it called? The M25 or outside of it?
No.
Oh no,
outside.
No. Outside, far outside.
Yeah, which is great. I mean, I think for people who do live, within that kind of commuter belt. However, if you're a central London person like myself, it would be commuting outwards, so kind of in the wrong direction.
So
but they do also have offices, both of them, I think, within central London for sure.
Are they far? I mean, is it far? What's the first place again?
It depends. Chalfont St. Peter.
Yeah,
so I suppose it depends where you...
Sorry, from Liverpool Street. How far would it be? Putting you on the spot here.
In terms of, I couldn't do it in terms of miles. I don't know. Everything in commuter distance is terms of minutes and hours. So I think for me to get door to RWS headquarters from pretty central London would be maybe 50 an hour, something like that.
Fair. I'll consider.
I mean, if I'm central. If you were south or if you were east, then it would be obviously a lot longer, I would say. But you can get a train pretty much direct from Marylebone, and then you have to jump on a bus, I believe, that the company puts on. So they actually have their own shuttle bus between the local station and their headquarter offices.
Or you just zoom in. These days.
Oh, you mean virtually?
You do virtual. I wonder if anybody's
not going to zoom.
No, you're going to zoom in. Yeah. All right. Yeah. So look, this is basically the item that is going to dominate today's podcast. It's such a big deal in all shapes and all aspects. I mean, it's a big deal in terms of the money that's, or not even money, but in terms of the amounts and the staff count and the impact on the industry. And so we're going to really delve into this. And we're also going to talk a bit about something that's related to it. We just published a piece on LSP performance, some of the listed ones, which now there's going to be one fewer with SDL gone. So our charts.
But maybe one more with AI Media.
Oh, you're right. Happens. Yeah, there's going to be one more. Maybe who knows? Maybe one of the US ones is going to list at some point. Then we have a nice little story around an error that happened in in patent translation. Is it an error? Is it not an error? So we're going to talk about that. Then sweep. From our weekly sweep service, there's a couple of highlights, and then we're going to make a bit of an announcement for next week's podcast. Okay, let's talk about RWS buying SDL. So now we've established that they're, within the very greater London area, very important. So, interestingly, the by far largest localization and translation company is out of, firmly monolingual UK in terms of, national language, I guess. So that's an interesting aspect in this whole game. But okay, let's go through some of the key things here, right? So first of all, this creates a market leader with around $1 billion in revenue annually, right? That's based on last year's figures, but given that in this year probably they're not going to grow substantially, together combined they're at around $1 billion in revenue, so surpassing TransPerfect, which may still do a major deal this year. Who knows, right? But if they don't, then you got a new revenue leader. So RWS is actually not going to pay any cash. What they're doing is, because their shares, which we've mentioned, we mentioned this many times in this podcast before, their share price has risen so much. Actually, it's at an all-time high. It's roughly 20% up year to date. So their market capitalization is very high, and they're using their shares as a currency. Now, go and Google, all share acquisitions. I'm not the expert on that, but basically, they're issuing new shares. RWS is issuing new shares and is paying SDL shareholders with those shares. And that in the end, I think we're going to have roughly 70% of the combined company is going to be owned by existing RWS shareholders and 30% by existing SDL shareholders, right? And true to form, RWS is going to rebrand SDL. So the SDL brand is going to disappear.
Well, I was joking earlier. So we're now, well, not joking. I suppose it could be a reality. We're now going to have RWS Trados. No?
Oh yeah. Oh well, maybe we're going to have RWS SDL Trados 2021, and then some addition to it. No, I think they're. Nah, I don't know. I don't think we're RWS Trados. Well, people got their heads around SDL Trados because Trados was an original product. So they're going to get their heads around RWS Trados. Let's see. They're going to have to do it, otherwise it's too complicated. So yeah, bye bye SDL. And RWS's C-suite is basically going to lead the combined company. So we're going to talk about in more detail later who's going to run the company. It does make sense on a client level, right? They have somewhat complementary client basis. So there's not going to be, I guess, major issues with some of the biggest account, because if you go in and you own, all of a sudden you own 90% of Microsoft, the Microsoft account, Microsoft's probably going to tell you to. They're probably going to cut some, so it looks like they don't have a major overlap in terms of clients. And then, we'll delve into the financials later. But it's basically it's a very attractive deal in my view to both RWS shareholders and, of course, SDL shareholders, which are very happy after the past. I think the share price probably doubled over the past
like month or something.
Week.
It wasn't even that long, was it? It's a week.
It's like 2 weeks ago, right? And also, crucially, this is an all-share deal, so RWS remains net cash positive even after the deal. So that means they still have a lot of cash left for M&A, potentially, or for what they're going to, have significant integration costs when they're going in there. So, basically I had a lot of really, the reactions were stunned. I mean, a lot of people are kind of like, whoa. And traffic on our site is really high. I mean, people are reading this article. We broke the story around 90 minutes after it was published on the regulatory websites, right? So a lot of people want to read it. I mean, the combined company has, how many staff do they have? Like combined now?
What is it? Nearly 7,000? 6,800, I think.
Yeah, and probably 99.999% of these didn't know that this was coming, because this is a super sensitive, market relevant transaction. So they probably learned about it maybe from our article or maybe some internal email that went out at the same time.
I think they were quite quick to get ahead of
They
that.
Probably did, yeah.
Yeah.
But what did you hear? I mean, on the interwebs and elsewhere?
No, just, initial reaction of shock, I suppose, like you said. And I certainly didn't see it coming. I don't think, other people did either.
Yeah.
So I remember when I first looked at your LinkedIn post that you shared, the article, and it was the only responses had been the head scratch emoji.
The head scratch emoji.
So I mean, when I shared the article with a few people, some kind of former SDL, current SDL, whatever, the responses were still sort of shock and ranging from holy crap to WTF type
Yeah.
responses. So it's a big deal. Yeah, it's a big deal for people in particular. I think who've worked, many people worked a very long time at either SDL and RWS, and this is obviously a major transformation.
This is a major transformation. Yeah. So let's delve into this a bit more. So as we said, so basically they're paying a 50% premium. RWS is paying a 50% premium over SDL's most recent share price. That was yesterday, right? So they're paying 854 million pounds. So that's roughly 1.1 billion US dollars. So that's again a 52% premium over SDL's most recent share price, which means, which SDL shareholder would say no to that? It's hard to imagine any of these kind of institutional shareholders that are making up, the majority of SDL shareholder base that anybody would say no at this point. So in terms of revenues, the combined company again would be roughly 730 million pounds, so that's like $1 billion. In terms of combined operating profits, like 110 million pounds, so that's like 150, maybe 130. Well, I don't know the current exchange rate, but like 130 million dollars. So very, very profitable, probably in line with Language Line, right? Which is part of this other, and the headcount is roughly almost 7,000 people. So so it's going to be a big company. Let's see if 7,000 people will remain. There's probably some, whatever they call it, like streamlining, right sizing, all this corporate lingo. So. They said they actually looked at, RWS said they consulted with SDL management ahead of this, and they identified around $50 million pounds in annualized cost savings from the deal, like immediate cost saving. That seems, okay.
Is that just from Trados licenses or something?
I don't. That's a good one. Yeah, probably.
No, seriously.
Although RWS works with MemSource, they had this deal with MemSource in the past. So yeah.
Okay.
Yeah. So okay. So then, in terms of the leadership, the Andrew Brody, who's a major shareholder of RWS, is going to remain chairman and become chairman of the combined organization. Richard Thompson, the current CEO of RWS, will remain CEO. So Desmond Glass, CFO RWS, will become CFO or stay CFO, and then. From the SDL side, the only senior C-level person that I could pick up on the filing was Azad Uttam, who's going to become the CTO of the combined org. So he was the CTO of SDL. And then, SDL CEO Adolfo Hernandez and CFO Sina Walters, they're going to be leaving the company. There was some clause, like they had some additional sentence, like they will enter into some type of consultancy agreement, and stay close to the combined org for now. But they'll be out in the next, I would say, few weeks, and we'll talk about the timeline later on. Because I'll talk about this later on. It's not a fully done deal yet, but it's unlikely to fall apart. So. Strategically, this does make a lot of sense, right? And in this industry, we've been waiting for one of these, kind of transformative acquisitions for some time now. There's been a lot of M&A, but it was mostly targeted, tech, smallish. But this is a big one, which many people were, in a sense, expecting. Maybe not this combination, but this was definitely not the most unlikely of combinations, right? And the last really big attempt was obviously Lionbridge trying to buy TransPerfect, right, in this ownership battle in late 2017. So this is really a big one. And in terms of the business logic, just to pick out on two segments. So they were talking about RWS Life Sciences division and merging that with SDL's Life Sciences division. That really, is probably after TransPerfect or alongside TransPerfect, one of the biggest life sciences, or the top life science provider out there in the localization industry. And then also on the enterprise side, the tech side, right? You have Moravia and SDL, you combine those, and you have a pretty good coverage of Silicon Valley. So that would have been the one thing that I would have wondered if there's not too much client overlap, but apparently there isn't. Again, because if you own too much of a Microsoft or a Google account, then they're going to just cut it for risk purposes. So they're not going to give you the 100% share of wallet. Yeah, maybe in terms of the time, well, the cost, we do have a little bit there. Maybe you can walk us through that. There's like a little bit of a breakdown there in terms of the cost synergies. Can you just walk us through that a bit?
Yeah, in terms of cutting costs,
where are they planning to cut the costs?
Yeah, I mean, on the corporate and support side, so that would be things around rationalization and consolidation. Related to board and executive leadership team, they're expecting to cut costs around 40% in that corporate and support category. Across sales and marketing, they're expecting cost synergies, of 40%. By, as they say, optimizing sales and marketing functions across the joint organization, and some cost synergies due to certain third-party spend. 15%, they've said synergies there, and then 5% cost synergies due to overlapping language translation activities.
Exciting.
That might be
that's why people tune into the cast. No, but it's such a breaking story. It is, corporate support, sales and marketing, third-party spend, and overlapping language translation activities. Yeah, we'll see where that goes. And then, okay, let's talk about the timeline. So as I said, this deal isn't closed yet. Basically, they need to go public before it actually closes because they need to get all the shareholders on board. There's there's general meetings, extraordinary general meetings that need to happen. There's some what they call merger control clearances, maybe even antitrust, but that's never going to be an issue in this industry. They say in Germany, Russia, United States, and the UK. So today, August 27th, they published the offer announcement. Within 20 days of the announcements, they're going to be posting some documents. And they're just
28 days.
28 days, yes. And then they need to have shareholder approval. And they expect this to close in the fourth quarter of 2020, whenever, they finalize this. But I think this is going to proceed very, very quickly. I spoke to somebody, off the record who's very well informed. And I mean, there's just very little doubt that this is going to go through. There would have to be a major problem. And also, you have the chairman of SDL going there, and he's basically part of the whole communication, and he's saying he's very excited. And I think he's actually going to stay on the board of the combined company as a non-executive board member, non-executive board member. So he's going to stay on.
Who's that? The chairman of
SDL, David Clayton.
Okay. Yeah.
And so basically this is very likely to go through. And, it is interesting because it's a company now that has, I think we even have, it's a company that owns a significant portion of the market now. I mean, they've bought Iconic, the translation MT, the MT provider. They bought Moravia, so they have the enterprise clients. Now with SDL, they have the full technology stack, right? They have Trados, they have all these content management systems. They have SDLs.
Well, and the MT piece from
bit,
SDL as well.
Which actually, come to think of it, it's a little odd. You would buy Iconic, and then like a couple of months afterwards, you'd buy SDL, which brings probably a few dozen MT engineers as well. So, which brings me back to my theory, which is completely unconfirmed and full speculation. That
Let's hear it. What is it?
Well, I think, who knows? I mean, Iconic was very strong in the life sciences space, right? So maybe they were making some inroads on some of the major RWS life sciences accounts. So maybe, who knows? It maybe wasn't a full tech buy. It was maybe some kind of preemptive move on their side, because 2 months ago they must have known they were going to go for SDL. I mean, that's not something you're deciding overnight. There's a big process behind it. So yeah, very very interesting transaction. I mean, what's your take on the Trados side? What do you think is going to happen there? They're just going to let it live, and they're just going to continue to service those literally thousands of smaller LSPs, and it's something they want to build? Or is it more they're going for scale and they love the enterprise and life sciences accounts?
Both.
Okay.
No, I mean that's my initial reaction. I can't see them pulling Trados in any way from the market because it's so beloved. And
not going to pull it, but maybe sell it. I don't know. I mean, I'm just
sell it. Okay.
It's like you have this global conglomerate now that can service the very biggest accounts 24/7, the most demanding accounts. And then you also have hundreds or thousands of translators and LSPs as your customers, which are, directly your competitors. That spoken many times with Adolfo about this, and he says this is common in software, etc. But I mean, it's always been a slightly awkward position if you're in a sense the tool provider, but then your services division competes with you, competes with your clients at the end of the day. So it's something that RWS probably has to get used to. And again, I mean, they are working with MemSource as far as I know. So what's going to happen to that deal when you're all of a sudden, of course, you should be using the full Trados stack to work, right? There's a lot of integration challenges, but given from what we've seen with Moravia, it looks like RWS is a good integrator, very deliberate. I haven't heard too much noise around that integration, so seems like
it was kept fairly separate, wasn't it? The Moravia being its own business unit of RWS.
True.
With SDL, I think it will be pretty easy for the life sciences because there's already an RWS life sciences unit. So I think it would be fairly easy fairly easy to split out the sort of the SDL life sciences services, and then everything else, not sure.
Yeah.
If they wanted to, that is.
And they are, what I liked about the way they've integrated so far, it's kind of clean from a branding point of view. They have these 4 divisions, it's IP, it's life sciences, it's Moravia. I think that's it. 3. I think they had this kind of commercial translation thing, which they then folded into Moravia, if I understand it correctly.
Did some rationalization of the business units, which makes me wonder.
No, but this is good, because otherwise you end up with this like Frankensteinian thing, which has like 7 subunits, and no brand will ever be like retired. It's all there, and it becomes then it would become the RWS SDL Trados Studio X version. Which
but I mean, I think SDL already went through this slightly when having acquired Donnelly. So they've been talking about the kind of premium language services, or how were they referring to it? Yeah, premium, I think, or regulated industries. So they already have this sort of distinction, I suppose, on the SDL side between the regulated stuff, so the finance, the life sciences, the legal, and everything else.
Yeah, the Donnelly people, huh? Second acquisition within 2 years.
In like 2 years. just over, I think, 2 years. But
and it's this is not easy. It's there's a lot of movement in an organization when you do these types of deals. I mean, it's not business as usual. Everybody needs to, in a sense, prove again, where they stand, where they're positioned in an organization. So yeah, good luck with that. I mean, Donnelly had, how many people they had? They had 500, 600 people, around that, right? I don't know, something in that area.
I can't really remember. I left like 5 years ago. 400. Don't know.
So those 400.
No, more, because there was quite a lot of people in Madrid.
Yeah.
Great.
Yeah. So let's not delve too much into the list. Go check it out. I mean, we were comparing performances of those listed language service providers in a story early this week, and so just walk us through who came top, who ended up at the bottom of the list.
Yeah, well, so I think of the 9, as we said, soon to be 8 listed language service providers that we track on a regular basis. I mean, we technically Appen is firmly at the top in terms of performance year on year. I mean, however, Appen, not a traditional sort of language service provider in the space. Likewise, I mean, followed in terms of performance by Keywords Studios, who again is not kind of core language services per se. But both of those, I mean, right across the board, everybody sort of struggled between, I guess, February, March, April. But I mean, those two in particular made a very swift recovery. Keywords is back up about 40% year to date, and Appen is over 80%. I don't know what that is, 80, 90%.
Yeah, I think if you looked at it now, that was actually, we took that on August 24th. It just dropped like 15% on results this morning. So they were, investors priced in amazing results, and probably results weren't so amazing. I haven't actually had a chance to look at it. So they're down a little bit, but still, up 60%, 65% this year, which is which is great given the earth is falling apart. So
yeah. Well, and then within the traditional language services space, you've got RWS, who we just talked about at length, followed by SDL, who still is up actually year on year, and as we said, their shares kind of rallied, I think, last week in quite strong terms.
Well, they rallied now. Sorry, just to pause you there for a second. They rallied obviously another 40%, so now they'd be like number 2. Today. But I mean, it's not like, of course, the shares just catch up to the offer price. So yeah,
right. Yeah, I mean, today obviously sort of threw some of this stuff out of whack.
Yeah.
Prior to the announcement, that was what was happening, and then people falling below the MSCI World. Rosetta, Straker, Honyaku Center as well, and also Media Localizer. Zoo Digital was slightly down today.
And then we also, I think we can't show it in the pod, but like you should really check out the articles. We also visualize the size in terms of the market cap, and then you have like,
I should put it on my screen.
Yeah, we're not there yet. Soon we're going to do the visuals too. Three giant circles for RWS keywords and Appen, and then tiny little dots for some of the others. So fantastic. So I think we're coming up on half an hour. I think we can just very briefly go through the Italian thing. I mean, basically, just walk us through what happened there. So it's patent, which is interesting because it's RWS's original vertical. So
yeah, firmly in that space. Yeah. So I suppose it's a relevant thing to close on. I mean, and this is really getting into the weeds, I think, this story, the nitty gritty of what life sciences or patents translations relates to. So this was a story really relating to an English translation from Italian that was used within a patent filing by a Swiss pharma company, IBSA, I-B-S-A. Never know whether to read out the acronyms or not. But so it was a translation of the word semiliquido. Is that how you say it in Italian? Don't know.
Yeah.
There we go. That's better. And the English that was used was half. The English translation that was used was half liquid. So that was the translation that they used. But the court found in a ruling that was indefinite, meaning that it had multiple meanings and it could be misconstrued, essentially, or construed other than they had intended. It was a case of really getting into the semantics. I mean, the pharma company themselves were arguing that half liquid meant the same as semi-liquid, and then they went on to define what that actually meant. However, there was an opposing side, which was an American-Israeli company called Teva Pharmaceuticals, that basically said, no, it's ambiguous, half liquid means something else, and it's too ambiguous basically for a patent filing. I don't really understand where all of this has come from per se. I mean, it sounds like the patent filing itself had already been granted. The patent had been granted. The company had actually already been given this patent for in the US for thyroid hormone formulations. There we go. But it's a big thing. The courts got involved, and they said that the translation that had been used was kind of misleading or indefinite in their terms.
Well, so we semi-understand it. We half understand it. It's the same thing. One's Latin, one is kind of Germanic, right? But anyway, so I liked what the lawyer that commented on this on a legal blog. He said, "Pay extra scrutiny to a patent application that has been translated. Translators are human, and errors occur." So I think we'll leave it at that.
A warning to us all.
It's a warning to us all. And I'm really excited about next week. We promised guests, and we're really excited to bring on Kimon Funikidis. from the CEO of Argos. And we'll tell you why in next week's podcast. I mean, well, first of all, he's a great guest. He's very informed. He's been in this industry for a long time, but there's a particular reason why he.
I thought you were going to say we were going to have Andrew Brody on.
Andrew Brody. Yeah, he spoke to me a few times in the past. I think when we started out 2016. But no, well, he's definitely going to get an invite to the pod.
He's welcome. He's welcome anytime.
He's welcome anytime, as is Richard Thompson from RWS. All right. Well, thank you so much for listening again, and have a good rest of the week. A fantastic weekend. Stay safe, and catch you all again next week. Cheers. Bye-bye.
Thank you. Bye.